Hey everyone. All right. How we doing? We're about to start our conversation on rethinking global finance. From market projections and risk assessment to fraud detection, personalized wealth management, AI is quietly yet profoundly changing traditional and decentralized financial models. You know, obviously we're here in Singapore, financial hub. I'm from Hong Kong, another financial hub. So we're all talking about how AI is changing how these institutions work. And we have a great set of speakers with us today. We have Craig Kortig, Global Head Digital Data and Coverage Platform, CIB from Standard Chartered. We have Vivian Zhang, Chief Digital and Data Officer, Asia BNP Paribas Wealth Management. We have Michael Wu, Co-founder and CEO of Amber Group, and Tianyi Zhang, General Manager of Risk Management and Cybersecurity of Ant International. Now, I'm going to start things off with a couple rounds of questions for our speakers here, but as I'm doing that, we want to hear from you, the audience, so please think of questions. This is an interactive discussion, a conversation between you and our speakers, so please think of them. And when I start calling for questions, Barry, to stand up and kind of share your own thoughts, your own insights, your own experiences with AI in this space. So I think I want to start things off by kind of letting all of our speakers kind of stake their position in terms of how they're using AI in these institutions. And maybe I'll go with Craig first. I mean, how are you using AI? How does AI fit into Standard Chartered strategy?
Good afternoon, everybody. Nice to be here. Just wanted to say that I ran your questions, the pre-questions through advanced voice this morning. Yeah. Then I learned one thing, which is really interesting. So I personally used AI to help myself prep for the session. So if I'm not clever and I don't sound smart, it's AI's fault. And if I am, then it's mine. But all right, so look, I think as a major global multinational bank, we're in the same kind of we have the same kind of challenges that other institutions our size have. We're trying to work out how to operationalize AI at scale. Is it front and center of our strategy? Of course, that's not a debate today. It's now how, right? It's now how do we actually take a very, very big backlog of use cases, all right, and really put those through the right kind of control and governance onto the right infrastructure, and then more importantly, how do we measure the value that they're going to create in terms of be that an efficiency or a revenue or even new things. So, you know, how we apply, for instance, AI to product management is an area we're interested in. So I don't think it's a debate that everyone has the strategy. I think today it's really about the how, and really looking at sort of infrastructure, governance, use cases, and ultimately, what value we're going to create for our customers, right?
Why don't we stick with kind of large global banks? Vivian, how does AI fit into BNP strategy?
First of all, just make a disclaimer. I also use ChatGPT to prepare for this, but I had to print it out because there's so much data from ChatGPT. I was like, okay, I need to check off all the points that I want to cover in case
to summarize.
Yeah, I did. This is a summary. Can you believe it? Okay, now I actually echo what Chris has just mentioned. Right, AI is very central to our strategy as well. We are a very huge bank in Eurozone, the largest actually. And my function, I work in the wealth management function. So there's a lot of money, a lot of millionaires, a lot of billionaires out there. And we have a very, very small workforce, right? Maybe about 7,000 to 8,000, in all, RMs, bankers, IT, L&C, legal compliance. So without AI, I don't think we can actually, go through the massive amount of information and data we have in the bank and outside of the bank to help our clients and our RMs achieve what we need to do. I mean, as a wealth manager, what do? We really optimize, and our role is optimize, protect the wealth of the clients, right? And to perform wealth legacy issues or matters. And we see that AI is so central to what we need to do to really augment the RM. So if there's a question later about whether AI is going to replace the RM, I can tell you no, it's not going to happen. Because, RM, AI is a co-pilot for RMs. That's our belief, right? It is not an autopilot. We don't believe in that. So we see a lot of potential, and we have the use cases lined up. Again, it's about getting the bank very comfortable with using AI, right? Because there's a lot of risk. We have seen it hallucinating right in front of us when we do a presentation to our CEO. Not too great, negative demo. But you can see that this is one path that we will embark on and we won't turn back. That's a certainty. Yeah, and we are actually really going to invest in AI because we're going to set up a center of excellence in Singapore for Asia, wealth management.
Tianyi, Ant International, another global financial company, present in all these markets out here in Southeast Asia. How does AI fit into Ant's strategy, and how does AI fit into the work that you're doing?
Okay, good afternoon, everyone. I'm Tianyi from Ant International. and I'm currently in charge of risk management, cybersecurity, and also overseas AI risk. I noticed both of you mentioned like use the AI tool and have a disclaimer of AI. That's a good thing. That means everybody knows like AI itself made mistakes, made up things. It has its own risk. That's exactly my job. And yes, and I think today's forum is talking about AI plus everything, right? Plus everything. And among all those fields, I think two fields are most challenging. One is healthcare. One is financial service. Like it requires really high trust level to like make you comfortable to have AI manage your health and manage your wealth. So from customer perspective, there are three things to consider. First, whether it's accountable from AI. Okay, financial service really needs professionalism and really needs fast and accurate decisions. And the second one is whether it's expensive from our partners. They may ask that. So if this AI service is not affordable, then it's far away from our business. And the third one, of course, that's my job. It's about whether it's secure or safe. So, and International's strategy of AI is quite straightforward. It's trying to solve these 3 pain points. We start with vertical expertise model training to make sure it's professionally enhance the professionalism, deep understanding in this domain. And also, we have the AI as service platform to empower our partners to make AI accessible and affordable. And third one is this is AI. We call it AI Shield framework. It's my job to make sure the AI service is protected. Yeah, that's the strategy here.
So last of all, Michael, I want to make sure you get a chance to talk about how you're using AI. You're obviously a smaller company, potentially means you're more agile, more able to try out new things. How does AI fit into Amber's strategy?
Sure, thank you, Michael Wu here. And like you said, Nick, we came from a different position, right? Unlike Standard Chartered, BNP, or Ant, we still see ourselves as a 8-year-old startup. And funnily, we actually started as Amber AI when we started as a tiny team in Hong Kong. We were actually one of the first, I think, Asia companies to actually dared to use black box machine learning neural networks to price financial markets, to trade financial instruments back in Hong Kong in 2017. Now, very, very quickly, we pivoted fully into a crypto company because you could barely survive as a tiny AI company back in 2017, 2018. But we kept that AI DNA in-house. And then because of that, we always used AI, or I think up until late 22, more specifically, all kinds of machine learning as an internal tool, as a very effective tool to discover data, discover signal, or to track data, on-chain data, or the security fund sourcing, and of course financial markets data, which is our bread and butter. But things sort of changed after, of course, the large language models took off. In 20, I think at the end of 22, early 23, when ChatGPT really took off, for the first time we realized, or at least I realized, I had been seeing AI too narrowly. I had still, up until that point, saw AI as a very quantitative tool, as a tool that deals with data, and therefore you first had to structure the data, clean up the data, or a lot of the work had to be dealing with translating, information into structured data. Now with large language models, it's different. It's fundamentally different. They dealt almost in a way end-to-end, from information to information. They take text data, or nowadays, multimodal data, and deal with that directly and produce information on the other end, and sort of skipping this sort of data cleaning, a lot of the data structuring work. And that opened up a lot of things. And for the first time, I think in 23 and 24, we realized that AI can be beyond just tools, or just what now today I call functionality agents. So actually, interestingly, similar to one of the panelists mentioned, right, we also had a very large, I guess the largest crypto wealth management business in Asia called Amber Premium, which is newly listed on NASDAQ as well. And for that business, we also have a lot of RMs. A lot of our RMs are experts in both handling high net worth customers and handling digital assets. In 23, 24, we tried to initially build AI agents to be co-pilots. And at some point, we realized, they function differently. They're not great as co-pilots. They are better actually as sort of in a way, the leaders, the ones in the driving seats. And that eventually led to our realization that, with large language models and with the increasing ability of these models, with the increasing ability of tools that for these AI agents, eventually, they should be autonomous and they should be in the driving seat as projects, as enterprises, as organizations. And that came to a point where, we decided to launch a platform to do that called AI.ac this year. And now back to your question, what do we see AI about Amber? Fundamentally, I see today Amber is a crypto company, but going forward a year later or so, I actually see us as an AI-fi or agent-fi company. What do I mean by that? Crypto will be the rail, the currency, the only medium that's possible for AI agents to actually drive economic activities, to have its own financial power, to drive its own resource, and to truly function autonomously. And so I think AI is a pretty big deal for us.
I want to kind of bring in Craig now. I mean, we were talking earlier before our kind of briefing calls, and you noted that this isn't your first digital transformation. You've seen plenty of these over the years. Is this time different? Is there something different about the push to adopt AI that's different from previous times that companies did go through digital transformations, were supposed to but didn't? Is it different this time?
It's different on a number of reasons and profoundly different. So 2 or 3 things to think about. The first is we're pretty much at like the version 1 of the browser of AI today. Right? So if you think 30 years from now, well, the browsers are 25, 30 years old already. Look how far that technology's come in that time. We are literally year 1 or year 2 of the AI space, and it is moving significantly more quickly than the internet did, right? For a number of reasons. The second reason, and the reason it's moving so much more quickly, is that for those of us that were around in the first digital revolution, it was a bunch of outsiders and small companies at the time trying to convince the big incumbent players that they needed to digitize their businesses because customer experiences were changing, new opportunities, new modalities of interaction were starting to emerge. But it was the little guys. We were all the little guys trying to convince the big players. That is completely reversed today. The biggest players in the world with the most amount of customers, with the biggest balance sheets, are the ones driving the AI agenda down. And so the time frame of what we see today is now shrinking into literally months, right? And the capabilities that we're seeing being launched, and you'll know this, you'll see this all the time, what you couldn't do 3 months ago, you can now do. And just to put that in perspective, GPT-3 had 1.7 billion attributes. GPT-4 is 175 billion. GPT-4 is about 1.7 trillion. GPT-5 will have anything up to 50. That's in 3 models, 3 model evolutions, right? And you combine that with the kind of compute that you're seeing coming now from NVIDIA and the next set of their chipsets at 2.5 times the speed. I don't think we've even vaguely aware of how quickly this space is going to move, and I don't think anybody does actually. And so I think it's profoundly different because it's coming down and we can't avoid it, right? Whereas I think with digitization you could have complex adaptive strategy and kind of work it out. Today I don't think you've got time to work it out.
Tianyi, I want to bring you in here because clearly AI is becoming more and more powerful. That leads to a lot of great opportunities for companies, but also a lot of risk, people using this powerful AI against your company for nefarious purposes. How are you thinking about AI specifically when it comes to risk management and cybersecurity? Like, what's on your mind when you're trying to think about risk management and AI?
Okay, yeah. I think when we talk about AI and risk, there is a 2 sides of the story. First, it's risk management needs AI. When we do all the traditional risk management for financial institutes like fraud detection, like anti-money laundering, KYC, all these tasks, they should be and they could be empowered by AI as a cutting-edge technology. It's also what we are trying to do. And the second thing I want to emphasize today more is about AI needs risk management. As I started with, like we all know, AI has its own problem. Like first, as we all know, it made up things. Because fundamentally, large language model is a generative model of probabilities. Okay, so since it gives diverse results, it gives diverse dialogue. It's not guaranteed to get the correct answer. Second, we call it AI service risk. That's because the entire service life cycle now, when we provide AI service, actually is vulnerable. If we consider all the traditional cybersecurity work we are doing, we build up all the firewalls, all our protections against the external attack of the things to control in and out information flow. But in AI age, when we use agent to agent, we use MCP, actually it's just a start point. How can we prevent our customers and clients from external attacks, from all the malicious misuse? And the third one, maybe all of you may be more familiar with it, we call it AIGC, AI generative risk, for example, deepfake. I would like to share some numbers, but because it's not far away, it's not just like fun emojis on the social media. In certain market, we do find more than 70% of the new enrollment could be deepfake attack in our real business. So they are real serious threats. Okay.
Mm-hmm. Yeah, we're going to see the power of some generated creative content later in the conference, so stay tuned. Features May. Vivian, I want to go back to you. You said like you're working in wealth management, you're dealing with very wealthy people who control a lot of money. I mean, for these clients and these customers, I mean, how are they thinking about AI? Do they want the human touch, as in they want that human service because they are these wealthy individuals, or instead, do they see AI as a unique selling point? They want people to adopt AI. They want these robo-advisors. They want these AI-enabled portfolio management. Like, how are these individuals? Do they want AI, or do they want more human touch?
To answer that is really yes and no. It depends largely on which generation tier they're in, which wealth tier they're in. Now the younger ones, what we call the next geners, they are all for AI, right? They want speed, but they want speed, they want transparency, and they absolutely want to know how the AI works, right? And they want to use AI to look for thematic investing around sustainability or tech stuff. That's the younger ones, right? That generation. Now for the older group of ultra high net worth clients that we looked at, they are very cautious about AI for sure, right? They are very careful, but they see AI as a support tool rather, and not something they will use for investing. That's how we read it, right? But at the same time, if you look at it, right, across the whole wealth management, it comes down to trust, right? How much can AI give trust, the level of trust from AI for these customers, and as well as the level of customization that AI can bring to the client. Now, having said this, it means that there is definitely a space, right, for the RM to be part of the whole loop, right? Because when you talk about trust, how does the AI algo hold your hand, when in times of market crisis, or when there is a huge policy change or a geopolitical situation arise? It's always going to be the RM. You can't go to your AI chatbot, and pour your sorrows about how many margin calls you're getting, right? So there is a room really for RM to be around.
I'm going to open it up to questions in a second, so continue thinking about them. But as you think about it, Michael, back to you. You talked about the idea of Agent Fi, of having these autonomous agents now being able to conduct some of this financial activity. What do you think we can trust this Agent Fi to do right now? And in the future, as this stuff gets more powerful and as people start, figuring out what it can and can't do, what do you think Agent Fi will eventually be able to do?
Sure, thank you, Nick. I think these are great questions. What can they do now, right? Let's start with that. Right now, pretty much everything you think a human team can do, I think an AI agent can do to some extent. It might be good at some stuff, might not be not so good at some stuff. But one thing for sure, it's pretty much getting better at everything. So there's a point There are different points where it will exceed different functions or different groups of people in what they do. But eventually, it's hard to imagine there are things that we humans still outperform AI agents eventually. Now, do AI agents, in that sense, replace us? I actually don't think so, at least not in the immediate term. Because first, right, in that process, I think Craig very, very rightfully mentioned how the current AI revolution or the AI paradigm shift is driven top-down. It's driven by, very large companies with billions of dollars, or I guess hundreds or even potentially trillions of dollars into AI. It's driven by large governments, right, putting this as a national interest or strategic focus. But I do think, when it comes to AI agents, just like the analogy to internet, the applications will come in a bottom-up way. There'll be a lot of verticals, a lot of specific verticals where, some agents outperform or be the best product that's out there first versus other verticals that will come later. Now, because of that, right, we will start to see first these agents to be very common in certain verticals, or certain vertical agents become very, very capable. As this comes a very important point, as they become more capable, they interact with more users, they get more feedback, and they become better. Today, all the large, and that's also why it will start in a bottom-up sort of fashion, because today you look at the large companies, the large AI companies, the leading AI companies, right? They are all trying to build, first general models, general tools, right? Even the agents, they are all coming up with agents. ChatGPT coming up with agents, Grok very soon, and so on. They try to be a generalist agent first, right? And in that sense, all these underlying models, we call them intelligence models, or these generalist agents, they will have too much data, almost too much data. Their attention is too spreaded that they can be good at a lot of things that they won't be best at certain things. Now, these vertical agents that actually interact in specific customer base, or what we call, they interact with specific communities, get specific of training data on specific verticals behaviors, will excel and outperform these general models and general agents in that particular vertical. So that's why I think this bottom-up factor is very, very important. Now, to the second part of your question, right? So what can they do in future? I sort of answered that, but I also think if you do believe these agents will be better than us in a lot of functions, why won't they be better companies? Why won't they be better projects? Why won't they be better organizations? The only thing that's stopping them to do today is they don't have the autonomy to drive resources. Today, an agent cannot have the autonomy to say, hey, I want to spend this amount of money to do that, or I want to invest in this versus that. Now, again, that's why back to our field, I do think crypto or broadly defined digital assets is currently the only plausible way, the only path to enable these agents that are becoming better than us in one vertical by the other to outperform us, because they will finally have the financial freedom, they will have the financial resource. Through crypto, they can transact, they can advise, they can even hire us human back to do what they want, and they will be in the driving seats.
It'll be an interesting interview process.
All right, I'd love to open it up to questions, insights, thoughts, comments from the floor. Does anyone have something they'd like to share? I'm happy to keep talking, but sure. Yes, please. Could you stand up and kind of just say who you are, where you're from, and you can direct your question to one of the speakers, but other speakers, please feel free to jump in with more thoughts.
I'll probably be a bit greedy and split my question across two people, if that's okay. So Alan Kelly from Moxbank, so heavily related to Standard Chartered Group. Right. My first part of my question, I'll probably direct at Craig if I can. So we're talking about innovation effectively, right? So we've got companies onboarding AI models, and they're doing PLCs, et cetera. Regulated banks, we've got heavyweight onboarding processes for technology vendors, right? Because of perceived risks. These are processes that maybe are not fit for purpose anymore, right? So traditional technology risk questions are not easily answered anymore with black box AI models. So are you finding a need in banks, or do you see a need for us to kind of relook at, reassess, and even rewrite risk and onboarding frameworks for technology? Otherwise, banks will fall behind in innovation, right? Because we can't move quickly. The second part of the question, maybe for Tianyi and Ant Group, you don't have these issues, right? So you can innovate outside of a regulated environment. but are you seeing challenges then trying to convince financial institutes to onboard AI-heavy processes or services because of the perceived risks?
Why don't you, Craig, you go first?
Yeah. So even besides crypto, I'm not crypto, AI, sorry, crypto in my head. I would say to you that we have to relook all of our onboarding and risk anyway, right? Because we have a very generic process that I think is, in many cases, not mitigating the risk it thinks it is. I think when it comes very specifically to how big multinational banks are going to have to deal with AI, I think it comes down to the scale of the partner you're going to onboard. And we're only going to feel very comfortable playing with the biggest players who understand our risk environment and are able to respond to that. And so, yes, I think it's a challenge. And I think we've seen specifically some of the smaller niched bottom-up players who have got very specific vertical AI solutions. We've struggled to onboard them. They probably subscale relative to us, and they can't necessarily answer all our questions. And so that is slow. Where we see traction is where we deal with the OpenAIs, the Microsofts, the Googles of the world, because they come with an understanding of how to deal with the enterprise. I do think you will see a full rewrite of all onboarding, all risk, and AI managing risk. I mean, again, it's a recursive problem, right? Who's going to manage the AI that's managing the AI that's managing the AI? It's the seventh line of defense at some point. But I do think these are problems that we're going to solve. I will say, though, I don't think that we should be at the cutting edge of innovation around AI as a big bank. I think that's a risky place to be, and there are a lot of other. I think it's a relatively risky place to be, and there are a lot of other organizations and industries that can be there. We have a very deep responsibility to the economies and communities we operate in, not to do stupid stuff, right? And I don't think that we should take that risk. I think we can afford to be a good follower. I think we can afford to be a little bit behind the curve. Let's face it, financial services, in the big sense, haven't been the most innovative players. Banking's been around for 600 years. We really haven't reinvented ourselves in that time. Crypto and blockchain is the first time we're really starting to consider really fundamentally changing our payment rails globally. Nothing's changed. We've changed communication. We've changed how we email each other. All of that's fundamentally shifted over the last 30 years. Payments haven't, for instance. Right? It's the same thing. We do the same way, right? So let's be prudent. Let's take a risk-based approach. Let's not necessarily first move. I'd love to. I wasn't always in financial services. I came from ad tech, and ad tech was a very interesting space because if you weren't moving, you were dying. But I think it's a fundamental question of the accountability we have to our customers and to the economies we service.
If I may, Craig, you mentioned a very interesting point that I actually want to ask, right? You mentioned that, and very understandably, right? Standard Chartered, you want to deal with, very large company or company of similar size because they understand the risk environment, the constraints, the process you have, right? And you mentioned a bunch of companies, Microsoft and Google and sort of that. And you included OpenAI. Now, OpenAI is, perhaps one of the largest AI companies today, right? It's very sizable, but it's actually, I think it's around, it might even be younger than Amber as a company.
Oh, no, it's small, relatively, yeah.
Yeah, and not only that, right? If you think about it, OpenAI, or at least from the outside perspective, right, is a bunch of first and foremost AI researchers, right? And then sort of, and the product people that start tapping to, sort of productization, especially on the commercial end of, what chatbots with AI or, now some research tool agents. When a company, my question is, when a company like OpenAI, that's very sizable, leading AI player, come to work with, say, Standard Chartered, do you truly think you guys speak the same language or have the same understanding? Or?
No, I think it would be naive to think we do, but they are a leading player. They already have over, arguably the numbers around 3 million customers, right? Commercial customers. I'm talking about the 500 million consumers that use them. So they're scaling incredibly quickly, and they know they've got a really big opportunity to displace some of the big incumbent players in the enterprise. And so they're scaling that part of their business up really quickly. So we have very interestingly mature conversations with them. I mean, it doesn't feel like you're dealing with a startup in that sense. They have a lot of money. And I think one of the challenges that many organizations have selling to banks is the sales cycles are so long. They're expensive, Like it just costs you a lot of money to sell stuff to banks, right? Because you could be in an 18-month sales cycle. You could be, you're not in this year's budget. You're in next year's budget. I mean, I have conversations about doing things in 2028, and it feels to me like that's a whole other universe, right? And in the context of, no, we'll do that in 2028. I'm thinking 2028. Don't I want to be on a farm somewhere and like drinking a cocktail?
Or maybe the AI already took over the negotiation.
Yeah, I mean, so it's a very interesting, like the time frames that banks operate in. So I do think we feel more comfortable when we're dealing with scale. I think that's a mistake, actually, in many regards. We should get better at really nailing our onboarding and risk processes with very highly vertical specialist AI. Because I think they bring something, and we've seen this actually in something we're busy piloting at the moment. They bring something that the big general models just don't do yet. I think ultimately the general models will do everything. That's, we've moved from artificial general intelligence now to speaking about artificial superintelligence. That's sort of what's emerged over the last couple of months. It's kind of like we're no longer worried about whether or not they'll be as smart as us. They're going to be significantly smarter than the sum total of all humanity. But we have to get right. We have to get very good at some of that vertical stuff, and I think that's where we'll see the benefits. Actually,
yeah. I want to bring in Tianyi and Vivian with this question. I mean, yeah. So, I mean, how do you feel, Tianyi, about like this question of being large, being able to work with new players at Ant? I mean, do you find it easy to work with these rising players? Maybe easier than some of the bigger banks. How do you think about this question?
Yeah, back to the audience questions about innovation. I think it's not about a big player or small, not about traditional banks or fintech companies. We do see like giants, like we mentioned Microsoft, mentioned Google. They are actually running very fast. And for small companies, I believe most of you never heard of DeepSeek before, like 12 months ago, but now it's a big name, right? So it's quite influential now. So I don't think it's about the size. It's all about whether we create value, whether we have a right strategy, and we have strong execution. Okay, I would like to maybe use two use cases in Ant International to illustrate how we think of this innovation will bring value to the customer. From I think many of you mentioned the effectiveness and efficiency brought up by AI. But I also want to add another point. Large language model, this wave of AI actually also changed a lot in AI democracy and inclusion. Okay, some of our clients for Ant International, they are very small. They could be a couple, husband and wife, operating their Amazon store, online store in their like one bedroom to apartment. That's all. But now with AI's help, they can have the access to all the new technologies, new tools, like to deal with automated orchestrated payment. Okay, they can deal with the dispute solutions, risk management solutions, and even like they can collect money from all different currencies and also deal with foreign exchange volatilities with all the AI models. That's something really new from what is different from last decade. And I think that's the innovation of AI we brought to the world. Not only effectiveness, not like replacing someone like with agent of human. It's all about like to a next layer. Okay. And also another example is about like when we talk about innovation, we also always need to stay compliant. And itself, the work itself is also could be empowered by AI. I would like to use the example in investigation of FC financial crime control for cross-border trading and for cross-border transactions. Usually they are very complicated. It requires knowledge across domains like KYC, like money laundering, like fraud detection, a lot of things. And even like, don't even mention there are so many different local regulations. Okay. Before that, in our practice, it usually requires at least 4 weeks to have a new hire to start with entry-level investigation tasks. And it took years for them to be really skillful. But now with AI help, with the Copilot, with all the external knowledge base, with all the agent help, they can search things, they can provide answers, they can provide suggestions, they can draft a document. Okay, and most important, they have the protocol to ensure the reviewer follow all the procedure, all the checkpoints to meet the requirement from the regulations. So I see it's not a conflicting or replacing of AI with a new pattern with old pattern. It's something like ongoing, and we can see the interaction between machine and human being is most productive. Okay.
I want to let Vivian weigh in on this large versus small question before I open things back up to the floor.
It never crossed our mind or even my mind, that we'll pick a large or a small player over each other. In our experience in the past, right, we have worked with very small startups, really small ones, unheard of. I mean, there's a risk, of course, right? And we went through that risk. They went offline because they didn't get paid for 2 weeks. So they kind of like burnt us. But you know what? We tried again with other startups, and we found ways around it. We are also working with big companies. In fact, some of the LLMs that we are using in the bank, in the group, right? We're part of the group. We are working with Mistral, right? It's huge in France. We are also working on trying to launch something which is leveraging the OpenAI LLM today. So I would say that for us, it's very much business driven. It really depends on what's the value add that this outfit, big or small, is going to bring to us. Now, having said this, right, what you do have a point, right? We also struggle. I was just explaining at my table earlier that in the past we tried to onboard this South Korean startup 9 years back, very ahead of time. They were doing some ML, NLP stuff. And then we're going to pay them something for their specialists, right? And then they said, Vivian, can we don't take the payment? We work for free for you for 6 months, but we don't want to sign the 60-pager MSA. The MSA was 60 pages. It's going to kill them, right? And I was so shocked, right? It's a very strange requirement, I thought, at a point in time. But you see that 60-pager MSA is really meant for big companies and big outfits. So we realized it and we changed, right? It became like maybe about 4 or 5 pages after that. So I would say that there is room, at least within BNP Paribas. I'm quite hopeful that we will have equal opportunities for most of the outfits that we want to work with. As long as it comes to our attention, sometimes it's about opportunities, right, and luck, whether we chance upon them in our journey while carrying out innovative stuff.
Any other thoughts from the floor? Why don't we go with you in the back there?
Hi, my name is Faraz from Standard Chartered. Question for Michael. So Michael, you have pioneered MIA, which is your agentic ambassador that you took to investor events, etc. What have your learnings been from that experience?
Thank you. This is a really interesting question, and
full disclosure, we work together.
Oh, yeah, that's why the smart questions.
If you give him a hard time.
Next question, not from someone
Even fuller
affiliated with Standard
disclosure,
Chartered.
he's my boss, so make me look good.
Totally. Yeah, but back to your question, actually, I've had quite a journey since launching AI.ac, then sort of, Mia launched on AI.ac, what we think the first fully autonomous economic agents. And what I learned is very similar to what I just shared, right? Agents are, right now you see Mia as sort of my best analogy is a very bright, young super intern. She can do a lot of things. She can do some things very amazingly. She still makes a lot of mistakes, and sometimes she behaves very dumb, to be upfront. But we keep adding to the infrastructure. AI.ac is the platform and therefore the infrastructure. For example, I give one specific example. Mia runs her own Twitter marketing. She posts 24/7 in multiple languages, interacts with her followers and even comment on posts she thinks interesting and all of that, like a human, like a social media intern. When we first enabled her to post pictures, right? The first type of pictures she posted are based on what she thinks she looks like. So her images, we call that selfies. So she started posting her own selfies. You guys should check her out. I do think she has great vibes in her selfies. Then later on, we added the ability for her to post memes, self-generated memes. Now, at the time, Mia was launched on Twitter for, I think, less than a month. So most of her followers are actually our team members, all within Ember, right? When she launched the memes, everyone got excited. We all liked the memes, we repost the memes. Then because the way we designed her, she take that feedback. Then we realized for the next 2 weeks, she stopped posting any selfies. She only posts memes because she found that's the most effective way for spread it. We have to talk to her, meaning we have to look into, her I guess, thoughts, data, and then, sort of tweak that to make sure, she has a better understanding about, small data sample, I guess, a larger, need a larger track record and all of that, right? So that's one small example of, we are building, especially back then, right? I think that's April or May. I think Mia is already 1,000 times smarter than back then, right? Building some basic abilities or workflows for agents and, things that are unexpected happen, and then we get to iterate based on that. Now, I think that happens with the large AI companies as well, with all the other AI startups, right? But the more specific you go to, the more practical you go to on the application layer, the more direct feedback, the more real problem you will solve. It's unlike training, it's unfair to say, but I know friends who work at these, largest models. It's unlike training a general model, where you sort of have to deal with things on a very abstract and mathematical level. Here, it's more engineering, right? Building a specific agent is more engineering. Another example, when we added her ability to manage liquidity, again, I think crypto is a native currency for AI agents. They have to use that as their economic power. We let Mia manage her own token liquidity. Now, she learned how to input liquidity into DEX pools or, or do whatsoever. But then when users ask her about it on Twitter, she doesn't know. Again, we run into the problem, and it happens to human too, right? Sometimes we learn a new thing very quickly, and our left brain or right brain, I don't know which one's which, doesn't realize what the other half is doing, right? So things like that you will only learn and solve when you tackle a very specific problem, and it's increasingly engineering. And now the most exciting part is, I think by hopefully this time next year, a lot of these engineering problems will be both spotted, identified, and potentially solved together by these agents themselves. We do have a framework on how to make that work. And, they will start to engineer themselves better. And yeah, I will stop here. But, back to your question, it's been quite a journey. And I do think, this time things will accelerate very, very fast. And my prediction, in 3 to 5 years, agents like Mia will be very capable, way beyond our imagination. And this agentic economy, empowered by crypto, might be larger than all our, what I call legacy economy today.
We probably have room for one more audience question. Please, someone not affiliated with Standard Chartered.
Hold on, he just said something. He said back then in May,
Yeah.
June, July. Okay, like literally 2 months ago. She's 1,000 times smarter. You said that in 2 months, right?
Yes, and I think that pace will be even faster.
Yeah, back then. I felt like we were dealing with last year.
Well, yeah.
Oh, maybe I just ask you, Michael, question for you. Tancho Finger from Mastercard. I'm not. I really like your comments on agents. In my view, it will become a data play at the end of the day, because you need data to fine-tune those agents, and especially private data. And there are a lot of different private sets sitting all over the place and not being used. What's your view on how this is going to play out?
Before you answer, did you want to raise a point as well? I think you also had your hand up.
Oh yeah, sure. I mean, it's related to the AI side. So I build AI models for fraud prevention. That's kind of my bread and butter. But it's more building on that in terms of measurement, because we see a lot of cases where AI is deployed. For example, Klarna was the biggest example where they were like, we're going to replace our entire sales force with AI, and they're like, oh wait, this doesn't work. Backtrack, hire more humans. So it doesn't really work unless we deploy something and actually, in a scientific way, actually measure when it's making impact. So for example, Mia, are her Twitter posts getting feedback from the right people, and she continues to generate something versus like offensive memes, for instance? What's your perspective on that? How do you see that adopting that internally, specifically from a data science perspective?
Thank you. Actually, I think. Sorry, what's your name, sir?
I'm Seth. Sorry.
Seth. Yeah, Seth. I think your discussion actually. I echo a lot with what you discussed. It's a lot going to be about data. But now, when we talk about data, like you said, there are a lot of private data, industry-specific data, user case-specific data, but they are still static data. And like Self said, right, the most useful data are going to be, the sort of the feedback, the contextual feedback data that are not just a time series, but are actually, ongoing. And then you will have, one of the problem we are currently trying to solve is, if you only have the end result, right? You have initial data, what user do. You have the end result, say Mia does this and the user does that. You're missing a lot of missteps, right? And the more missteps you can direct users to give you, the midpoint data, the better the model becomes. And by model here, I mean, I guess specific model in tackling specific problems, small models. So in that sense, right, I do think why, back to my point, the generalist model, maybe one day they'll become the best at everything. They'll be God, they'll be ASI, and so what, right? If we get that point, fine. Before that, right, I do think their problem is they will have too much data. And it's very hard for them to I guess, structure the data in a way, back to, pre-LLM, without a lot with how, when we have a lot of data, financial markets, you actually have too much data, but it's hard to structure them into useful data, right? I think it's the same problem will happen for, really generalist model. They have too much data. And it's hard for the model to tell which data is important, in what sense, right? Versus the vertical agents, right? They all have real interactions in what they do. And these feedbacks, again, similar to how the models are trained, right? They're based on, min, max, loss functions, rewards, and all of that. In that feedback, interactive feedback process, these smaller models will be very, very good at doing one specific thing. And then the agents that use a particular set of these smaller models in doing a particular set of activities will be the best in that vertical. That's my opinion. So back to your question, yes, I think it's about data, but I think the edge for agents will come not from static data, but from these, very specific contextual interactive feedbacks.
Let me add a bit. I've been a data scientist for more than a decade before I took this position. So I think that's a very interesting question about the data size, especially some private data in certain domain, whether they are helpful or whether they are essential to financial service. I think it's not about more or less at this moment. When we see the success of the large language model, we see the transformers, a successful model, a framework. Basically, it's based on the next token prediction. That's all about the natural language. We have this kind of pattern behind that. And we have so much public data we can train the model. Unfortunately, I don't think we have mature enough model to include all the modularity in our financial service practice. Like time series could be one example. We rely so much on graph learning before for fraud detection or the graph learning. And how can we learn the embedding from a graph network? It's not, I don't think there is a settled framework already. They are still under exploration. So I think that's a very good question, but I don't think we have enough or not enough. We don't have a conclusion. We still see the scaling law in this area, and we see a lot of interesting application based on this modularity and heterogeneous data. That's very interesting. Yeah.
So I think we've had a lot of great insights from you, our audience, and from our speakers here, covering, again, large banks, small startups, payment processors, everything in between. I want to thank all of our speakers, Craig, Vivian, Michael, Tianyi, for all of their insight today. I want to thank all of you, our audience, for sharing questions too.